USDA has just released its year-end cattle inventory data for 2008. We have more on what these numbers mean for the industry on this week's Market Watch.
Market Watch, brought to you by Fort Dodge Animal Health.
Joining us now is Tod Kalous, research analyst of CattleFax. Tod, thanks for joining us today.
Thank you for having me, Kevin.
The USDA just released its annual cattle industry inventory report, providing some insight into some macro trends of our industry. What did you read from that report?
Well, Kevin, the report indicated pretty much what CattleFax expected. The liquidation of beef cows continued again in 2008, and we also had a smaller calf crop for the year. The USDA did throw a bit of a curveball when they went and revised some of last year's inventory numbers. Based on the Ag Census data, which was just recently released, they revised the January 1, 2008 beef cow inventory smaller, and they also revised the 2007 calf crop smaller. So when you combine these revisions with the liquidation that we saw in 2008, what you have is you actually have a smaller calf crop and an even smaller beef cow herd than we previously thought.
Well, what does that mean short-term for beef cattle producers?
Well, Kevin, we can definitely see how our industry is shrinking from a cattle inventory standpoint. The beef cow herd is the smallest it's been since 1963, and the calf crop is the smallest it's been since 1951. Although a shrinking inventory is not necessarily a healthy industry from a macro standpoint and a long-term point of view, the smaller cattle supplies definitely supports increased profitability in the future, especially as our U.S. and our global economies begin to stabilize.
Yeah, some good fundamental trends. What, in a nutshell, does CattleFax believe this means long-term for U.S. cattle industry?
Well, Kevin, we are currently faced with a bit of an overcapacity situation in our cattle feeding segment. So for cow-calf producers, the smaller cattle supplies definitely supports continued strong competition for their calves for the most part all through 2009. However, we can't forget the significant losses that have already been endured at the cattle feeding segment. We've had losses on top of $250 per head pretty consistently for most of 2008 and so far in 2009. So based on these losses, we definitely think consolidation is going to continue, and it may even accelerate given these huge losses. For our calf price outlook, we think calf prices are going to average lower for the year versus 2008. We also think that calf prices are going to be fairly seasonal, meaning they should peak in the summer months and then decline into the fall. As for our cow inventory, we don't expect to see any growth during 2009. We expect cow slaughter levels to remain relatively elevated due to the lack of profitability mainly. But that said, we should see smaller supplies again for 2009. And that's important because when we think about how these economies are and when they do begin to recover and consumers can regain their confidence, and that should help stabilize that beef demand situation, which means we definitely think cattle and beef supply should be higher at that point in time.
There's a light at the end of the tunnel, and it's not a train, it sounds like.
That's right.
That's great. Thank you for joining us today, Tod.
Thank you for having me, Kevin.
Appreciate it. For more information on the cattle inventory report and on CattleFax, visit cattleman2cattleman.org.